The global financial crisis and what happened in Nigeria, they were both really bad. We had our market decline from a peak in March of 2008 of 12.6 trillion naira to a bottom in February 2009 of 3.9 trillion naira. So you can imagine what that meant, that for every dollar that you invested, you lost more than 70 cents on that dollar. It was horrible for Nigeria.
What were the reforms you then instituted?
The reforms were varied, but the most important was really to establish that we will not permit anything that is wrong in the Nigerian stock market, in investing in companies, in investing through exchanges in Nigeria, because nobody would ever accept to give another person money if they know that that person will defraud them of that money. So that was first and foremost the most important for us, what you would call restoring integrity of the market.
What's the level of interest that investors are showing in Nigeria, both local and foreign investors?
Today, our markets have more than doubled since January 2010 when we started this reform program. We're back at the levels that we had in 2008. We have a market capitalization of our stock market that is 12 trillion naira, give or take. We have both domestic investors and foreign investors fully invested in the market in a 50-50.
Give us a sense of what it is that foreign investors see in Nigeria if many of them are now returning back to the market.
In 2012, our all-share index rose by more than 35%. This year already, we've risen by 34%. But I think more important for international investors is that everyone is learning about the stories about Africa's growth despite the fragile world economy. Everybody's hearing about the opportunities in Nigeria specifically, whether it be in agriculture, in power, in oil and gas, and other areas. What is the best way for you, if you're not familiar with a country, to access those opportunities, to access a larger consumer base with rising incomes? It's through the stock market.
Now, it's important to draw a distinction between investing on the stock market and those companies that physically bring their money into an economy and set up shop, foreign direct investment. But you're arguing for stock market investments. Why?
The World Bank says, give or take, that Africa needs about $100 billion in infrastructure. We are told by the African Development Bank that Nigeria needs $35 billion per year in infrastructure. That is not going to come from the federal government of Nigeria because our total budget is $30 billion to pay salaries for health, for education. And therefore, it's important that people realize that you can use the bond markets to raise money and that you can have your pension industry, you can have your insurance industry, you can have your citizens help you build the infrastructure that you need that can unlock your economy.
Now, we've been discussing some of the positive developments in Nigeria, but that doesn't take away from the real challenges that exist there. Poor electricity supply is one, exorbitant rates is another one, materials being imported from elsewhere, and of course, corruption.
It's so unfair on Nigeria. I mean, let's take the financial sector. There was a global financial crisis. We, the financial sector regulators in Nigeria, took very bold steps. If people needed to be brought to book for wrongdoing, they were brought to book. If they needed to disgorge illegally gained funds, they disgorged them. Tell me another country that made decisions as quickly as the Nigerian financial sector made in terms of tackling corruption in that sector. We at SEC, as you know, have a zero tolerance for anything that's improper, because the cost to us as Nigeria, the cost to the citizens of the country is huge, and we should not permit it.